If you own property in Florida right now, you need to hear this. The signs are everywhere, but most people are choosing to ignore them until it's too late. Let me show you what's actually happening in Florida's real estate market. Not the sanitized version you see on the news, not the optimistic spin from real estate agents trying to close deals. The real story that's unfolding right now across the entire state. I'm going to walk you through the data, the trends, and the warning signs that point to something serious happening in one of America's hottest real estate markets. And by the end of this, you'll understand why some experts are calling this a ticking time bomb. So here's what we're seeing. Florida home sales dropped by nearly 15% in the last quarter compared to the same period last year. That's not a small dip. That's a significant decline in market activity. And it's happening across multiple counties, from Miami-Dade all the way up to Jacksonville. But sales volume is just the surface. Let's talk about what's driving this. First, insurance costs have absolutely exploded. The average homeowner's insurance premium in Florida has more than doubled in the past 3 years. In some coastal areas, people are paying $15,000 to $20,000 per year just for basic coverage. That's not a mortgage payment. That's just insurance. And here's the thing that most people don't realize until they're deep into the process. Many insurance companies have completely pulled out of Florida. They've decided the risk is too high. Citizens Property Insurance, which is Florida's state-backed insurer of last resort, has seen its policy count skyrocket because private insurers won't touch certain properties anymore. When insurance companies, whose entire business model is based on calculating risk, decide a market is too risky, that should tell you something. Now let's add property taxes into this equation. Florida's property tax system is based on assessed values. As home prices shot up over the past few years, so did assessments. Even with homestead exemptions and Save Our Homes caps, many homeowners are seeing their tax bills increase by hundreds or even thousands of dollars annually. But wait, there's more. HOA fees in many communities have jumped significantly. Why? Because those same insurance costs affecting homeowners are also hitting condo associations and HOAs. They need to insure the buildings and common areas. When their insurance triples, they pass that cost directly to residents through higher monthly fees. I've seen condo associations where the monthly fees have gone from $400 to $900 in just 2 years. That's more than doubling. For someone on a fixed income or a tight budget, that's not sustainable. So now you have this perfect storm. Insurance is through the roof. Property taxes keep climbing. HOA fees are skyrocketing. And we haven't even talked about mortgage rates yet. Interest rates have gone from the low 3s just a few years ago to the high 6s and 7s today. That means the monthly payment on the same house is dramatically higher now than it was in 2021. We're talking about a difference of $1,000 or more per month on a typical Florida home. Let me put this in perspective with a real example. A $500,000 home in Florida in 2021 with a 3% mortgage rate would have a principal and interest payment of around $2,000. Add in insurance at maybe $2,000 per year, property taxes at $7,000 per year, and you're looking at a total monthly payment of around $3,000. That same house today, if it's worth $550,000 after some appreciation, with a 7% interest rate, now has a principal and interest payment of $3,600. Insurance is now $5,000 per year. Taxes are $8,500. Your monthly payment is now close to $5,000. That's a 67% increase in monthly housing costs in just 3 years. Wages have not kept pace with that. Not even close. This is why we're seeing demand dry up. People simply can't afford these payments anymore, and the people who bought in the last 2 years are now stuck. They can't sell without taking a loss, and they can't refinance because rates are higher now than when they bought. Now let's talk about what's happening in specific markets within Florida. Miami was one of the hottest markets during the pandemic. Prices went crazy. People were buying sight unseen. Bidding wars were standard. But now inventory is starting to pile up. Homes are sitting on the market longer. Price reductions are becoming more common. In some Miami neighborhoods, we're seeing homes that sold for $1 million in 2022 now listed at $900,000 or $850,000. That's a real decline in value, not just a slowdown in appreciation, an actual decrease. Tampa and Orlando are experiencing similar patterns. These markets exploded during the remote work boom. People fled expensive cities like New York and San Francisco and bought in Florida for the weather, the lack of state income tax, and the relatively affordable housing compared to where they came from. But now that remote work policies are tightening and some companies are requiring return to office, that migration has slowed significantly. And the people who moved here are realizing that the cost of living, especially housing costs, have caught up to or even exceeded some of the places they left. The Gulf Coast, especially areas like Fort Myers, Naples, and Sarasota, face an additional challenge. Hurricane risk. After Hurricane Ian in 2022, the insurance situation in these areas became even more severe. Some properties literally cannot get private insurance at any price, and buyers are getting smarter. They're asking tough questions about insurance before they make offers. They're calculating the true cost of ownership, and in many cases, they're walking away when the numbers don't make sense. Let's talk about the condo market specifically, because this is where things get really interesting and really concerning. Florida has thousands of condo buildings, many of them older. After the Surfside collapse in 2021, the state passed stricter inspection and reserve requirements for condo associations. This is good for safety, obviously, but it's creating a massive financial burden for condo owners. Buildings now need to conduct detailed structural inspections. They need to fund reserves for major repairs. Many associations are hitting owners with special assessments of $50,000, $75,000, even $100,000 or more to fund these requirements. Imagine owning a condo you bought for $300,000, and suddenly the association tells you that you owe $60,000 for building repairs within the next year. Many people don't have that money. They can't get loans for it because it's not secured by anything, so they have to sell. But here's the problem. Who wants to buy into a building that needs major repairs and has a massive special assessment? Buyers are avoiding these buildings like the plague. So condo values in older buildings are cratering. We're seeing units that sold for $400,000 now listed at $250,000 and still not getting offers. This creates a doom loop. Owners can't sell. They can't afford the assessments. The building deteriorates further. Values drop more. It's a cascading failure, and this isn't affecting just a few buildings. This is happening across thousands of units in South Florida, Tampa, and other coastal areas. Now let's zoom out and talk about the broader economic factors at play. Florida's economy is heavily dependent on real estate, tourism, and service industries. When real estate slows down, it has a ripple effect. Construction jobs decline. Real estate agents make fewer commissions. Mortgage brokers process fewer loans. Home improvement stores see less business. Furniture stores and moving companies slow down. This creates a feedback loop where the economic slowdown makes the housing market weaker, which further slows the economy. Tourism is still strong in Florida, but it's not immune to national economic trends. If the U.S. enters a recession, travel budgets get cut. Hotels and vacation rentals see less demand. That affects property values for investment properties. Speaking of investment properties, let's talk about the short-term rental market. Cities and counties across Florida have been cracking down on short-term rentals. New regulations, higher fees, stricter enforcement. Some areas have effectively banned new short-term rentals altogether. Investors who bought properties specifically to run as Airbnbs or VRBOs are now stuck with properties that don't generate the income they projected. They can't cover their mortgages with long-term rental rates, so they're selling. And when investors panic sell, they drop prices to move properties quickly. This adds more inventory to an already softening market. More supply with flat or declining demand means prices have to adjust downward. Now here's where it gets really concerning. We're starting to see mortgage delinquencies tick up in Florida. Not dramatically yet, but the trend is moving in the wrong direction. When people can't afford their payment increases from escrow shortfalls, due to rising insurance and taxes, they start missing payments. If this trend continues, we could see an increase in foreclosures over the next year or two. That would add even more inventory to the market and put additional downward pressure on prices. Some economists are predicting that Florida home prices could decline by 10 to 20% from their peak over the next 18 to 24 months. In some overheated markets or vulnerable property types like older condos, the decline could be even steeper. 20% might not sound catastrophic, but remember that many people bought at the peak with minimal down payments. If you put 5% down on a $500,000 home and it's now worth $400,000, you're underwater on your mortgage. You owe more than the home is worth. You're trapped. Let me be clear about something. I'm not saying Florida real estate is going to zero. I'm not saying the entire state is going to collapse. Florida has fundamental strengths. Population growth, while slowing, is still positive. Job growth in certain sectors remains strong. The weather and lifestyle still attract people. But what we're seeing is a correction. A significant one. The unsustainable price growth of 2020 to 2022 is reversing. The market is adjusting to the new reality of higher costs and higher interest rates. The question is how much further it has to fall before it finds a bottom. Different experts have different opinions. Some believe we're near the bottom now and prices will stabilize soon. Others think we're only in the early innings of this correction and there's more pain to come. What's clear is that anyone thinking about buying or selling in Florida right now needs to go into it with eyes wide open. This is not 2021 anymore. You can't assume prices will keep going up. You can't ignore the insurance costs. You can't overlook the HOA situations in condos. Due diligence has never been more important. Understand exactly what you're getting into before you commit hundreds of thousands of dollars. For sellers, the market has shifted. You might need to adjust your expectations. The price your neighbor got in 2022 is probably not the price you'll get today. Properties are taking longer to sell. Buyers have more negotiating power. You need to price realistically if you want to move your property. For buyers, there might be opportunities emerging. If you can afford the total cost of ownership, including the high insurance and taxes, there are deals starting to appear. But you need to be selective. Not all properties are equal in this market. Location matters more than ever. Building condition matters more than ever. Insurance availability matters more than ever. Run the numbers carefully. Make sure you're not stretching yourself financially. Understand that if prices continue to decline, you might be underwater for a while. Only buy if you're planning to hold long-term and you can handle the monthly payments even if your costs increase further. The investors who are still active in this market are being very cautious. They're looking for properties that cash flow from day one with conservative assumptions. They're avoiding anything speculative. They're focusing on solid rental markets in areas with strong job growth and good schools. The days of buying anything in Florida and expecting it to appreciate 20% per year are over. That was an anomaly driven by unique circumstances during the pandemic. We're back to a more normal market now, except with the added complications of insurance costs and climate risk. And let's address that elephant in the room. Climate change and hurricane risk are now permanent factors in Florida real estate. Insurance companies aren't leaving Florida because they're being irrational. They're leaving because their actuaries are telling them the risk doesn't justify the premiums they're allowed to charge under Florida law. Sea level rise is real. Hurricane intensity is increasing. Flood zones are expanding. These aren't political statements. These are facts that affect property values and insurance costs. Buyers are increasingly factoring this into their decisions. Younger buyers especially are thinking about where they want to own property for the next 30 years and whether coastal Florida makes sense given these long-term trends. This is putting a premium on properties in safer locations. Inland properties. Higher elevation. Areas with lower hurricane risk. These properties are holding value better than coastal properties in flood zones. So what does all this mean for the average person watching this right now? If you own property in Florida, monitor your situation closely. Stay on top of your HOA finances if you're in a condo. Shop your insurance every year. Appeal your property tax assessment if you think it's too high. Budget for cost increases. Don't assume everything will be fine. Be proactive. If you're thinking about buying in Florida, take your time. Don't rush. Do your research. Understand all the costs. Get multiple insurance quotes before you make an offer. Check the flood zone. Review HOA documents carefully if it's a condo. Talk to multiple lenders. Make sure you're comfortable with the worst-case scenario on costs. If you're thinking about selling, talk to a good real estate agent who knows the current market. Get a realistic pricing strategy. Be prepared for it to take longer than it would have a few years ago. Be ready to negotiate. The Florida real estate market is going through a major transition right now. It's not the end of the world, but it's not business as usual either. The people who recognize this and adapt will do fine. The people who ignore the warning signs and hope everything goes back to how it was in 2021 are going to be disappointed and might get hurt financially. Knowledge is power in situations like this. Understanding what's happening and why puts you in a much better position to make smart decisions whether you're buying, selling, or holding. The crash might be too strong a word for what's happening in Florida real estate, but there's definitely a serious correction underway. Prices are coming down. Sales are slowing. Costs are rising. The market is fundamentally different than it was just a few years ago. Anyone involved in Florida real estate needs to understand these dynamics and plan accordingly. Hit subscribe if you want more real estate market analysis.